Are you curious about how recent shifts in the Denver, Colorado real estate market could impact your next move? Or maybe you've been wondering, is now the time to buy a house? Let's explore what's been happening in this unique and challenging real estate market that we're seeing. Now, I can guess what you might be thinking. It's too expensive, or rates are too high, or I can't buy right now, or maybe now might not be the time for me to downsize or right size. And I get it, because for years I hesitated on purchasing property, never realizing there were pockets of opportunity I was letting pass me by. In today's real estate market, did you realize you can even create your own affordability? It's true. Hang with me today. First, let's take a short real estate market history tour for the Denver metro area. Now, if you remember, between 2005 and 2012, we had a clear buyer's market here in the Denver metro area. Then starting in 2013 through about 2019, the market was shifting and favored sellers with our typical seasonal trends. Then came that extreme seller's market of 2020 through early 2022, fueled by historically low interest rates and, of course, pandemic-driven demand. But after that, it all changed. By mid-2022, interest rates started to rise, and they've remained higher than expected for longer than expected. Along with that, when the sellers finally came to accept the reality of higher rates, we've seen inventory levels rise. But where are our home buyer demands? Are they simply slumbering like a hibernating bear, or has it been more active than in past years? Or are we actually shifting into more of a buyer's market due to those higher home prices and continued higher rates and more inventory? This is a very interesting time in our Denver real estate market. Some listings have seen multiple offers still and quick sales, and then others seem to sit there for a longer period of time in spite of price reductions. The spring housing market is right around the corner here in Denver, and I'm just wondering, is the housing market trying to find its footing? Because, pending home sales increased last month, new listings increased last month, but closed sales have been disappointing, and the median sold prices are still increasing. So grab a cup of coffee, you're going to need it, as we dissect the latest trends in the Denver housing market and uncover how you can create opportunities and affordability with the fluctuations that we're seeing. As of February 2025, here's what we're observing in the Denver metro area for detached and attached homes. Pending home sales are up 10.1% year over year. New listings have surged by 15.9% compared to last year. However, closed sales have dipped by 9.4%, meaning a lot less competition for you if you're a buyer right now. But in spite of this, the median home price has increased 3.5% year over year, standing at $595,000, up from $575,000 last year. Homes are typically on the market for 31 days before going under contract, up from 24 last year. Inventory levels of available homes have expanded to a 12.9-week supply, indicating a possible shift for a more favorable buyer's market. Remember, it was only 7.4 weeks of inventory this time last year. However, with this market, it's really a tale of two markets. So let's take a deeper dive into specifics. So for single-family homes, pending sales have improved by 12.6% year over year, a slight increase from last year, but showing solid growth compared to the month before. Closed sales have decreased by 7.5% following typical seasonal patterns, increasing from January, but still trailing last year's figures. And the median sale price is now $640,000, reflecting a modest 2.2% increase, which is showing a slowing of the market right now. New listings are up by 13.7% year over year, and this is a huge drop from January's 27.7% increase, which could mean that we could see a market tightening, leading to sellers having more leverage if this slowing of new inventory continues into our spring selling season. Now, for attached homes like condos and townhouses, pending sales have seen an uptick of 3.2% year over year. Closed sales have fallen by about 15.2%, possibly due to those rising HOA fees linked to the increase in insurance costs. New listings were up 21.1% year over year, so a lot more for buyers to choose from, and the median price is slightly up by 0.1% to $395,000. Interestingly, a higher percentage of attached homes closed below asking price compared to single-family houses. This indicates some nice buyer leverage in this area of the market, perfect if you want a more turnkey, less maintenance style lifestyle. Also, concessions were common in a majority of the transaction, often applied to buyer closing costs or rate adjustments. And just so you know, days on market and weeks of inventory were not separated out, but in looking at my MLS, I have to say, if you're thinking about downsizing and a turnkey townhome or even condo is appealing, along with rates dropping, then this seems to be a good time to explore your options. Now, earlier I mentioned how you might be able to create opportunities in the midst of all that we're seeing here. Let's look at what this could mean for you as a buyer, whether you're downsizing, right-sizing, or even exploring home ownership for the first time. So many people are allowing external factors that are out of their control to decide whether or not to buy right now. And they tell me they're waiting for rates to go down. I get it. I totally get it. You want to make the best move at the right time. But here's the reality. Interest rates are unpredictable and unlikely to return to those historic 2 and 3% we saw in 2020. Remember, those were government engineered as a response to a slowed economy, also created by the government. You waiting for ideal conditions might mean missing out on creating opportunities in the current market. Instead of waiting, consider some of these strategies to create opportunity and affordability. 1. Seller paid rate buydowns. Negotiating with sellers to cover part of the mortgage points, effectively lowering your interest rate over the course of your mortgage will save you thousands of dollars. 2. Leveraging existing equity. If you're downsizing or right-sizing, use equity from your current home to offset costs or even get into a smaller mortgage, which again will save you thousands. 3. Explore creative financing options. Think assumable mortgages, reverse mortgages. They're just some of the ways you can find terms that suit your financial situation. Acting now, you're going to position yourself to refinance later if rates decrease, while in the meantime benefiting from your home's ongoing property appreciation. The Denver real estate market is dynamic and ever evolving. In fact, it's one of the most challenging and interesting I've seen in the 20 years I've been a realtor. And, I know it's natural to seek that perfect moment to buy, but the truth is the best time to make a move is when you're ready and informed. If you're considering making a move, but you're still wondering about the timing, check out my informative handout titled, Should You Wait or Act Now? The link is in the description. Or I'm happy to discuss tailored strategies with you and the numbers that meet your unique needs. My contact information is in the description as well. Hi, my name is Peggy Durstoff, a realtor with Live Denver Suburbs powered by HomeSmart. Remember, in real estate, waiting can sometimes mean missing out. I know I did for years, and I don't want you to suffer from FOMO. Denver's housing market is filled with opportunities for those ready to take action. Thanks for watching, and I'll see you on the next video.